Drew, great to have you on the program again this morning. I want to start kind of big picture. It's been nearly 4 years since your IPO. You are less than a few dollars above your listing price, but the company has expanded. You've made a number of acquisitions. You've gone into the collaboration space. You're capturing more of the enterprise and creator space. What are investors missing? How are you creating long-term value here?
Well, I mean, we're building on a lot of our momentum. And as you mentioned, 2021 was a strong year for us. I'm really proud of the progress we made. We ended the year with over $2.2 billion in ARR. We significantly increased profitability, grew free cash flow by over 40% last year. So we've certainly made a lot of progress since we went public, and we have a lot of opportunity in front of us. We launched new products last year like Dropbox Capture and Shop in beta, and then we've been successful with our acquisitions. So last year saw DocSend and Command E, or added them to the Dropbox family as we continue expanding beyond files.
Drew, we talk about this often, but it feels like it comes down to converting free users. You have a ton of those into paid users. The growth there is sort of flat, and even though you are adding all of these new features, I wonder, do you need to get more aggressive about making people pay, even if that loses you some of those free users? How are you going to convert them better?
Yeah, well, as you pointed out, we have a huge audience of free and paid users, and we continue to grow subscribers for sure. And part of the longer term opportunity and what we're working on right now is introducing more of our products to our existing customers. So a lot of folks started in just using Dropbox, but as you look at our portfolio now, we got HelloSign and DocSend and a lot more to offer our customers. So we think that's a big lever to continue to better monetize that audience and do more for our customers.
Hey, Drew, you know, in terms of the nature of post-pandemic work, we talked to Cisco earlier in the week. They're actually changing some of their metrics to better reflect hybrid work products in general, because all these IT departments are reinventing themselves, and they'll continue to do so even after people start coming back to the office in bigger numbers. How are you thinking about that, and how you're positioned, and where that's going to lead us in terms of, quote, normalization?
Sure. Well, I mean, we see a lot of all along, we've seen a lot of opportunities in this transition that we've all lived through in the last couple of years, from working almost entirely out of offices to now working almost entirely out of screens. So from a company standpoint, we've changed our operating model. So we have our virtual first model where primary orientation is working from home, but hopefully as there's light at the end of the tunnel with COVID and things are reopening, we're going to be able to reintroduce the in-person experience. I know I'm certainly looking forward to that. And then from a product perspective, there's a lot more new pain points that our customers have. So, you think about even just the problem we started with, like what used to be 100 files on your desktop is now 100 tabs in your browser. I think we all struggle to keep track of everything. And so we see a big opportunity for Dropbox to organize all your cloud content in addition to your files, and things like Command E, the universal search company that we bought last year, are important components of solving that problem.